All right, Rocktelling Nation, RT here, and if you're just tuning in, welcome to the only channel where we don't talk about macro, fundamentals, ratio charts, and market cycles. No. We decode them. We unravel them. We turn those complex market events into clear, fast-moving stories that are actually genuinely useful. Forget the Wall Street fluff. We're cutting through the noise to give you the bigger picture, what's moving gold, commodities, stocks, and where the smart money is flowing. No jargon, just unadulterated insight. All right, if you're ready to dive deep and get ahead, let's not waste another second. Let's get into today's breakdown. Okay, so page 1 sets the tone immediately. The title, The Golden Crown, Market Leadership Warning. And that is what this is. This is not another nice-looking gold chart you scroll past and forget 5 minutes later. This is the market waving a giant yellow flag and saying, hey, pay attention. Gold is not quietly participating in the background. No. It is dominating. And when one asset starts leading that hard across a messy macro backdrop, that usually means something deeper is shifting underneath the surface. This is the kind of move that says leadership has changed, the character of the market is changing, and investors who are still mentally stuck in the old regime may be about to get blindsided. Okay, so now page 2 is where the signal gets loud, like really loud. Gold is showing a 16.28% raw return. And on top of that, a 1.74 risk-adjusted result. All right, so that is the double trophy feat. The kind of setup that makes you sit up and go, wait, hold on a second. In other words, gold is not just winning on performance. It is winning on the quality of that performance too. And that matters a lot because usually, investors have to choose. You want big returns? Fine, take bigger volatility. You want lower drama? Fine, accept lower upside. That is normally the trade-off. That is the usual deal, the old bargain, the price of admission. But right now, gold is basically standing there and saying, why not both? Why not returns and stability and a cleaner ride too? And when one asset starts delivering profit without the usual emotional roller coaster, that is not just some random blip. No. That is a serious macro tell. It suggests capital is not simply chasing excitement, not blindly chasing beta, not just sprinting after whatever is hot this week. No, it is deliberately choosing safety, liquidity, and durability while still getting paid. And all right, so when the market starts rewarding that combination, that is when you really pay attention. Okay, so the catalyst here is doubt, nervous money. That is the key phrase, all right? Investors are starting to doubt growth, doubt policy, and doubt durability. Okay, so when people doubt growth, they start asking whether the economic expansion still has legs, whether this thing is still running or just stumbling forward on momentum. And when they doubt policy, they start wondering whether central banks can still save every wobble, every crack, every little shake in the system. And when they doubt durability, that is when it gets serious. That is when people start looking at highly priced paper assets and asking a very uncomfortable question. Are these things actually worth what we've all been pretending they're worth? Are they? Really? Because that question, once it enters the room, it does not leave quietly. And that, all right, so that is where gold steps in. Gold thrives when confidence gets shaky, when trust gets thin, when the market starts looking around the room for something solid, something real, something that does not need a story taped onto it every quarter. It is the classic flight to quality signal. Except this time, so it looks less like some side story in the background and more like the main plot. All right. Quick pause here. And honestly, if you're sick of market commentary that sounds fancy but basically says nothing, you'll probably like Rocketeller.com. Okay, so over here we talk macro, fundamentals, ratio charts, and market cycles in a way that actually makes sense. No Wall Street nonsense. No headlines recycled over and over like there's some kind of revelation. Just clear ideas, sharp charts, and the bigger picture behind gold, commodities, stocks, and where capital is really, really moving. Because the market is usually not random chaos, all right? There is usually a story behind the move. You just need to know where to look. And okay, so how to read it. So yeah, if you want less fluff, less buzzword nonsense, and more real macro insight, come follow our work and subscribe to our YouTube channel. For our newsletter, visit Rocketeller.com. Again, one more time, Rocketeller.com. All right. Let's figure this market out together. Okay, so the great equity exodus, financials down 10.74%, healthcare down 3.24%, and the S&P 500 down 2.88%. All right. This is not just a little sector shuffle, not some cute rotation. No. This is capital moving out of paper promises and away from the parts of the market that depend on perfect policy, perfect credit conditions, and perfect growth staying intact. And okay, so the big one here is financials. Because when investors start fleeing the plumbing of the financial system, that is not a cute little technical event. That is systemic discomfort. That is the market saying, all right, hold on. We are less confident in the paper structure than we were before. And that matters a lot because banks are not just another sector. They are the pipes, the transmission line of the whole machine. When money starts leaking out there, when confidence starts thinning there, that is usually telling you something deeper is wrong underneath the surface. So when the banks start bleeding while gold starts leading, you really should not ignore that combo. Then page 5 shows where the money is going instead. Consumer staples up 9.09%. Materials up 8.47%. Industrials up 6.52%. All right, this is the real stuff renaissance. Substance over fantasy. The stuff you can touch, move, sell, and actually use in the real world. The market is rewarding reliability, scarcity, and tangible production. If it can be mined, refined, shipped, stocked, or consumed, investors suddenly care a whole lot more. And that, is classic late cycle defensive hard asset behavior. It tells you people are getting more selective, more practical, and frankly, less willing to pay up for dreams. And all right, this is not anti-growth in the simple sense. No. It is anti-fragility. It is pro-cash flow, pro-necessity, pro-scarcity. It is the market quietly saying, okay, if I am going to own something here, I want it to be useful, durable, and a lot less dependent on perfect conditions. And that kind of rotation matters a lot because it often becomes the bridge between a gold breakout and a broader commodity move. So when you start seeing capital lean into staples, materials, and industrials like this, pay attention. That is not random sector noise. That is the market starting to favor the real over the fragile. The commodity tailwinds, this is the cause and effect chain. When gold leads, it often signals rising demand for monetary protection. And so that pushes investors toward miners, energy, raw materials, and the whole tangible asset complex. Why? because once the market starts repricing safety and scarcity, it usually does not stop at one asset. It spreads. It spreads. Gold lights the match, and the rest of the commodity space starts to glow. So the final warning here is simple. If you are still heavily positioned in paper assets priced for perfection, the market may already be sending you a message you do not want to hear. Substance is becoming the new alpha. Real assets are being re-rated. And if this continues, all right, the next phase may not just be about gold winning. It may be about the entire commodity complex reclaiming leadership. All right, guys, that's it for today. Hopefully this gave you a clearer picture of what's really happening in the market and where things could be heading next. If you enjoy this kind of macro and fundamental breakdown, okay, so make sure to follow our work and subscribe to our YouTube channel. For our newsletter, visit rocketteller.com. Again, that's rocketteller.com. Stay sharp, stay curious, and I'll see you in the next one.